Good morning, everyone. Welcome to our Phillip Securities Research Morning Call for 8th September 2025. Today, we will go through results for the following companies, which are Salesforce, Alphabet, NVIDIA, and some Phillip On The Ground for Micromechanic and Broadcom. It's a technical analysis for the S&P 500 and some of the ETF monthly for August and Singapore weekly, as usual. Please be noted that Paul, Darren, and Meow are on leave today, so for any read questions, please divert them to our P3 applications. All right. So moving on to the next slide is our usual disclaimer. Please be mindful that this presentation is solely for education purposes only, so please do reach out to your financial advisor before you make any form of investment. We start our presentation with the first company, which is Salesforce. Salesforce released their second quarter 2026 earnings result last week, and the title of our report is Margin Expansion is for the 10 consecutive quarters. First off is the results. The first half of the 2026 revenue and adjusted PATMI met our expectation at 49% and 51% of our FY26 forecast. In the second quarter of 26, our the company adjusted PATMI grew about 12% year-over-year due to the higher operating leverage. Moving on to the positive point, the first one is that the Salesforce revenue beat the top end of the guidance. The revenue grew about 10% year-over-year to 10.2 billion, which was 1% above the top end of the company guidance. This outperformance was driven by about 11% year-over-year increase in the main revenue segment, which is the subscription and the support revenue, who makes out about 95% of the total revenue. Salesforce core product, which are Sales Cloud and Service Cloud, who account for about 47% of the total revenue, both grew about 8% year-over-year to 2.3 billion and $2.5 billion respectively. And in particular, the integration and the analytics revenue segment grew about 12% year-over-year to $1.5 billion, driven by the strength in the MuleSoft and Tableau offerings, the application. Salesforce mainly benefited from the average revenue per user growth due to the existing customers shifting to the premium products and multi-cloud adoptions. Next positive point is that the operating margins continue to expand, and this time it's for the 10 consecutive quarter. Operating income increased by 32% year-over-year to $2.3 billion with a margin of 23%. This represents margin expansion of 366 basis points, and this is driven by the top line outperformance, outgoing cost efficiencies from the headcount reduction and lower sales-related expenses. And also last week from the news, if you read one, is that Salesforce also announced that they laid off approximately 4,000 of their employees from their support team. And they say that it is due to the increasing use of the artificial intelligence, AI, to handle this laid off employees into their tasks. So this cut account for approximately 5% of its total global workforce. But this is not new. They already did some of the laid-off few years back, where the amount is quite the same, and they also do some laid-off of their employees for about 10% of their total employees also in 2023. Moving on to the next negative point is that the Salesforce give out quite a soft third quarter 26 revenue guidance. Salesforce expects total revenue to grow about 8 to 9% year-over-year to 10.24 billion to 10.29 billion, and this is at the bottom end of the consensus estimate of 10.29 billion. The deceleration is primarily due to the challenging macroeconomic environment. Management highlighted that a measured buying environment, particularly in the US mid-market segment, is leading to the longer sales cycles, additional layers of deal approval, and reduced deal size. Next, moving on to the outlook. For FY26, the full year guidance, Salesforce lifted its total revenue growth expectation to be in the range of 41.1 billion to 41.3 billion, and this represents growth of about 8.5 to 9% growth year-over-year. So it's like a 0.5% growth for the bottom end of the total revenue guidance. The company guided subscription and support revenues to grow by 9.5% year-over-year, and to be driven by the momentum in the data cloud and the contribution from the Agentforce, which is their AI application. And this would be partially offset in the weakness of the market and the commerce segment, which is targeted to grow about 3% year-over-year. Finally, the company increased its forecast of FY26 adjusted earnings per share by 6 cents in the range to $11.33. For the next quarter, which is the third quarter of 26, Salesforce project total revenue to grow between 10.24 billion and 10.29 billion, which implies a growth of 8 to 9% year-over-year. The current remaining performance obligations to grow slightly above 10% year-over-year to include 30 million FX headwind. Adjusted earnings per share is expected to grow by 18% year-over-year to $2.84. So our recommendation is that we maintain the buy call that we gave out during the last quarter, with an unchanged target price of $364. Our WACC and growth assumption remain unchanged, and our FY26 revenue and earnings also remain unchanged. Salesforce catalysts include the ongoing margin expansion, robust free cash flow, and resilient demand for its core offering, especially in agentic and data cloud. That is all from me. I will pass to Melina for the updates on the Alphabet. Thank you.
Thank you, Fahmi. So for Alphabet, it's actually covered by Serena, but she's on leave today, so I'm just presenting on her behalf. So they recently have the U.S. judge release, so we've released a note. So just some update on exactly what the ruling is about and how it affects Alphabet as a whole. So the ruling actually started in 2020 when the DOJ and the 11 states, they sued Google, accusing it of illegally maintaining monopolies in general search and search text advertising. So the court started gathering evidence, and they later find out that indeed Google has monopoly power, and using exclusionary tactics such as exclusive default arrangement with Apple and Mozilla, and also tying Android distribution to the pre-installation of their Google services. So these actions do limit competition and stifle innovation and raise advertiser costs as a whole. So in September 2025, the judge issued a ruling. So to sum it up, Google will not be required to divest its Chrome or Android, but instead the remedies will be focusing more on stopping Google from carrying its search dominance into generative AI. So the company is barred from exclusive agreement for Search, Chrome, Assistant, and Gemini, restricted from tying Play Store assets to revenue sharing deals. And also they must share part of its research index and user interaction data with qualified competitors. So overall, we see the judge's decision not to require a Chrome divestiture. Of course, it's a clear positive for Google, because Chrome is closely tied to Google's ecosystem and drives about 20% of their US search queries. So combined with search, they actually account for roughly 70 to 80% of all US-based queries. Regarding to the ban on the exclusive agreement, as we also don't view it as a major threat, because Google is still allowed to pay partners for preloading and placement of Search, Chrome, and Gemini generative AI products. Given that Google, they have a strong market position and product quality, device and browser makers are unlikely to switch away from Google as their default. One area we are keeping a close watch is the requirement for them to share their part of their search index and user interaction data with their competitors. This definitely could help the emerging generative AI players to train their models. But right now, the data sharing is pretty limited. It excludes ad and knowledge graph data. So far, it does not pose an immediate threat to Google's core businesses. We still believe Google's diversified data sources will still give it a pretty strong edge in AI development. And another one worth mentioning is Apple also benefited from this, because over the years, Apple has been receiving an enormous amount, around $20 billion annually from Google, just to place Google as the default search in Safari. So that's basically just free money for them. It accounts for about 5% of Apple's revenue and 20% of their net income. So basically, they don't have to do anything other than putting search as the default in Safari. So this definitely is going to be a win for Apple. That means they can continue making that free money. that came out of nowhere. And at the same time, it also opens door for them to build new AI partnership with other companies, so that could help them close the gap with other hyperscalers. In a separate antitrust case, there's another one. So the DOJ has accused Google of monopolizing key digital advertising technologies, and started in April, where they found Google unlawfully monopolizing the publisher ad server and ad exchange markets. So the DOJ right now is seeking structural remedies, including divestment of Google's ad exchange and parts of DoubleClick for publishers. So the case is still in the remedies phase. The trial is set to begin and on the end of September this year. So on our rating, we've actually downgraded Google to accumulate following the recent price rally. We raised our DCF target price from $235 to $265. We do keep our revenue estimate unchanged, but we lowered WACC slightly just to reflect the improved investor sentiment. So overall, we see Google continuing to benefit from AI-driven product improvement, stronger ad targeting, and greater cloud capacity. So that's all the sharing from me. I'll pass my time to Iqbal.
Thanks, Helena. I'll be presenting on NVIDIA's 2Q26 results. So their revenue and PATMI were within our expectations, and their revenue growth of 56% is being driven by hyperscalers' capex investments into NVIDIA's Blackwell GPU. Yeah, so for NVIDIA, the first positive is that their Blackwell GB300 has started shipments in the second quarter, and this drove their earnings growth. And because of this transition to GB300, which has about a 50% higher high bandwidth capacity as compared to the Blackwell GB200, but also about the same inference performance as compared to the GB200. So this drove the data center segment growth. And there's also strong demand for NVIDIA's networking products. So networking is within their data center segment. And for 2Q26 itself, networking made up about $7.3 billion. So that's about 20% of the data center segment. Yeah, so this 7.3 billion represents a 98% year-on-year jump. And that is because there's higher demand for companies to scale their AI workloads within the GPU rack itself, and also between the GPU racks itself within the entire data center. So that is why there's strong demand for these networking products. And last but not least, for NVIDIA's positive, there's also an improved supply of the Blackwell GeForce GPU. So this is their gaming GPU, which drove their gaming segment growth of 49% year-on-year. Yeah, so there's strong demand among gamers for this GeForce GPU because it doubled their latency as well as frame rate. Yeah, so I think for the next few quarters, we do see continued growth in this gaming segment as well. As for the negative, there's a slower than data center growth rate. So even though 56% may seem impressive, it is actually the lowest kind of growth rate since first quarter 2024. Yeah, so since 2 years ago, if you compare relatively, this 56% year-on-year growth is the lowest. Yeah, this is because NVIDIA is slightly impacted by the US government's restrictions on its H20 chips to China, and also because from first quarter 2024 until 2025 itself, there's been a very strong growth in data center. So naturally, this growth will taper off. Yeah, and I think going forward, NVIDIA guided the next quarter's revenue to increase 54% year-on-year. This excludes potential H20 sales. Yeah, so for these H20 chips itself, fortunately, the US government has reversed their ban. So now they have issued some licenses for NVIDIA to sell this H20 to China. And NVIDIA guided about 2 to 5 billion of this H20 can be sold to China. And unlike AMD, NVIDIA actually has ready inventory to sell off already. So we may see some revenue coming in the quarter itself. Yeah, so assuming about $3.5 billion midpoint of H20 sales, the third quarter revenue could increase by about 64% year-on-year in total. And for our own outlook on NVIDIA, we do see hyperscalers CapEx growth of about 31% CAGR for the next 2 years. And we do see most of these CapEx going into NVIDIA's AI infrastructure. Yeah, so as you can see on the chart on the bottom left-hand corner, the blue bars represent the CapEx itself. And for the red line itself, even though there may be a dip in 2026, however, it's still a growth of about 15% year on year. So there may be a slight slowdown in CapEx investments, but overall, we do see the CapEx growing about 31% CAGR for the next 2 years. Our call for NVIDIA is that we maintain accumulate. We raise our target price to 185 from 145. This is because we raised our next year's FY27 revenue and PATMI by 24% and 31% respectively because of an expected increase in hyperscalers CapEx in AI infrastructure. So, for example, Google and Meta, they have raised their CapEx guidance by about 10 to 13%. And for Microsoft and Amazon, they sound more positive in terms of raising their CapEx. And we also see robust demand for NVIDIA's gaming GPU, GeForce CPU chips. And also, we do see some upside from the US government's reversal of the ban in H20 chips to China. Yeah, so overall, we are still positive on NVIDIA. Yeah, next slide, please. Yeah, I'll be covering Phillip On The Ground for Micromechanics. So Micromechanics released their fourth quarter 2025 results. We don't cover Micromechanics currently. So for those who are unfamiliar, Micromechanics is a company that does assembly and testing for back-end equipment. And recently they have pivoted into the front-end wafer fab equipment. So as you can see in the chart in the bottom left-hand corner, the dark purple segment represents the consumable tools, which is the back-end side. And then the light purple represents the wafer fab equipment, which is more of the front end. Yeah, so for fourth quarter wafer fab equipment, which is the light purple part, it increased 37% year on year from 2.7 million to 3.7 million because of an increase in orders itself. And overall, in total FY25 revenue, wafer fab equipment stands at 23% of total revenue. Compared to last year, it was 18%. And yeah, I will touch on the increase very soon. For their profit wise, the gross margins is up by 2.5 percentage point year on year because of a healthier product mix because there has been more wafer fab equipment. And fourth quarter net margins is also up by 5 percentage point year on year because of increased operational efficiency. So what this means is that they are able to reduce the lead times in more products to less than 7 days. And they have also managed to achieve better efficiency by reducing the amount of inventory being written off to 166K. Last year was 214K. Yeah, so our outlook for Micromechanics is that the main growth driver for this company will be wafer fab equipment. Currently, we estimate the total addressable market for wafer fab equipment to be 100 billion. If you talk about the testing itself for wafer fab equipment, it will be about 10% so about 10 billion in terms of the overall industry size. So there's still a lot of room for growth. And we also see increased sourcing from the US. Micromechanics mentioned that they are seeing more customers going to them in the US itself because of Donald Trump's policies to increase domestic production. So because Micromechanics has facilities in the US itself, so they are seeing more customers going to them to source for critical components for the wafer fab equipment portion. Yeah. So we do see the increased demand for leading edge wafer fab equipment to drive growth for Micromechanics itself. Yeah, so that's for Micromechanics. Next slide, please. Yeah, I'll also be touching on the Phillip On The Ground for Broadcom. They recently released their results last Friday, I think. Yeah, so for Broadcom, they are $1.6 trillion market cap company, and they have two main segments. One is semicon solutions, one is infrastructure software. So for their semicon solutions, the main growth driver will come from their AI semicon. So what they do in this segment is that they produce custom ASICs for their clients and also XPUs. XPUs just means CPUs and GPUs for their clients itself. And they also produce Ethernet switches for their clients' data center networking portion. Their third quarter revenue grew by 63% year on year, and this represents uh, 10 consecutive quarters of growth driven by their big three customers' demand for custom AI accelerators. Yeah, so for Broadcom itself, their clientele mainly targets customers that create their own LLM models. So you can think in terms of Meta, Google. They created their own LLM model. For example, Google have their own Gemini. So yeah, so that's where Broadcom targets. We suspect the three customers is Google, Meta, and also ByteDance. Yeah, so these three customers' strong demand for their custom AI accelerators drove their 10 consecutive quarters of growth within this AI semicon segment. As for their non-AI, they have some broadband products, enterprise networking, and also server storage. However, all these are still quite legacy products, so they aren't achieving high growth at this moment. As for their infrastructure software segment, this represents 43% of their revenue. It increased 17% year on year because there's strong bookings for their VMware Cloud Foundation. So this is a product which lets customers run AI workloads on premise itself. So customers will buy the hardware itself, and then they will also subscribe to the software of this VCF itself so that they can run their AI workloads on premise. For margins wise, Broadcom's operating margins is up 20 basis points sequentially, and their infrastructure solutions operating margins is also up by 10% year on year because they have completed the integration of VMware, which is the company which they acquired last year. And for guidance wise, they provided a very positive guidance for next year itself because they added a fourth customer to the custom AI accelerator segment. So a lot of people were speculating that this fourth customer is OpenAI. So if it is really OpenAI and if they can really execute in terms of running the custom AI accelerators, Broadcom did say that they expect 2026 to accelerate a lot more than 2025. Yeah, so our outlook is for Broadcom is that because they have a more than 70% market share in Ethernet switch, which helps to scale across data centers. So what this means is because, for example, for a company like Google, they have multiple data centers, and in order to scale across, which means for the workload of one data center, you add on to the workload of the second and the third data center, you will need this product called Ethernet switch, which helps to scale their workloads across the data centers itself, because it is not practical for a hyperscaler to consolidate all workloads into one big data centers because of power constraints. So that is the main constraints of AI hyperscalers now. So they have to, rather than consolidating all workloads into one big data center, they have to have multiple data centers itself. So this Ethernet switch is a key component to help hyperscalers scale across the data center for their workloads. And Broadcom having a more than 70% market share in this Ethernet switch will position them well to capture this demand. And because of hyperscalers' positive capex guidance, we do think that this will also drive revenue growth for the next few quarters, especially for because of Google and Meta's revised capex guidance. And last but not least, we do think that the market for customers who develop their own LLM will not intersect with NVIDIA's main market for enterprises that will run AI workloads. So even though that NVIDIA also serve Google and Meta, we don't think that it will very negatively impact NVIDIA's performance because NVIDIA also target a big group of clients which are enterprises who run AI workloads and not develop their own LLM models like Broadcom. Yeah, so that's our view. Yeah, so that's all from my end. I'll hand over the time now to I think Zane. Thanks.
Thanks, Iqbal. Good morning, everyone. I'll move on to the technicals. Next slide, please. So first one on the S&P 500, last week it posted a weekly gain of 0.3%. In terms of the daily chart, you can see that it continues to hold the orange yellow line, which is the 30-day SMA as a support, which has been acting as a very key support since end of June. So it's continuing to trade in this rising wedge formation, inching higher. So I think we are likely to see a higher highs ahead, with a new high being formed actually last Friday. So currently for resistance likely to be at 6,530 to 6,600 area, while support is likely to be at 6,415 to 6,480 area. Next slide. Yeah, so this is our ETF monthly for August. So we titled it most asset classes are likely to extend their gains in September. In terms of the performance in August, all except one of the asset classes were in the green. So the exception was Bitcoin, which pulled back 7.7%. The rest were in the green. Top gainer was ETF tracking gold, GLDM, which rebounded by 4.9%. In terms of their current trends, most of them are in the uptrend, which are S&P 500, US Treasury bonds, gold, as well as Singapore equities. As for oil, Bitcoin, as well as Hang Seng Index, they are in a range consolidation. For outlook for September, we expect most of them to continue their gains, which are S&P 500, US Treasury bonds, gold, oil, as well as Singapore equities. As for Bitcoin, we think that the price will continue to pull back in this month, and for Hang Seng Index, we expect the price to continue consolidating sideways. Next slide. So I'll go into more detail on the respective ETFs. First one, for the S&P 500 ETF VOO, we can see that from the chart, continue to show very strong momentum where price is trading above this trend channel. So at the end of July, there was a bit of a pullback from the channel resistance. However, start of August, price actually broke above the $588 level and continued to trade higher, mostly holding a bit sideways since mid-August, but uptrend is still definitely intact as it continues to hold along this short-term upward support line. So I think for September, we could still see higher highs hit with the next area of resistance possibly at 605 to 615 area. Next slide. And next one for the Treasury Bond ETF IEF, we can see that there was a significant development in terms of the chart. So prior to that, it has been mostly sideways, just range trading since July last year. And finally, it broke out of this range consolidation above the $95.50 level. And therefore, I think we could see some continued upside towards the next area of resistance, possibly at $97.30 to about $98.70. Next slide. Next one for the Gold Mini Shares Trust GLDM, there was also finally a breakout. So gold, there was an uptrend previously, and then price just consolidated sideways in bullish flag since middle of April this year. So price was just kept in this bullish flag, and there was a breakout above. It was a breakout above the $68.30 level this month, and therefore we could see higher highs ahead for the GLDM to possibly reach about $73.10, which is the projected target level. When we use the height of the bullish flag, it's about $4.80 projected on the breakout point at $68.30. Yeah, so we likely see this bullish momentum continue with a fresh breakout. Next slide. Next one for the oil and gas exploration and production ETF XOP, there was also gains. So price actually held support at $122 level in August, at the start of August, and there was a rebounded from there, and price also broke above this downwards resistance line towards the end of the month. So currently it's doing a back test at the level at $129. If this can hold as support, I think we could see some further bounce ahead to actually retest the swing high resistance form at the start of June this year, which is around about $135 about there. So we could see some gains continue for this ETF in September. Next slide. Next one for the Bitcoin strategy ETF, BITO, there was a bit of a weakness being seen. So initially at the start of August, price did a retest of the $19.60 breakout level, which was a previous double top. And prior to that, price also broke out of bullish cup and handle formation. However, towards middle of August onwards, there was a bit of weakness where after price did a double top after that, there was a breakdown below $19.60, and then we kind of see weakness in terms of price action. So I think with that, this month we are likely to see some further weakness continue this month towards back to the support area around 1740 to about $18.45 area. Next slide. Next one for the Singapore equities ETF, continue to show very strong momentum. So generally it was a bit of sideways at the start of this month, and then it managed to break out above this $4.29 level, and then we continue to form a higher high after that. So I think we're likely to see continued gains for the Singapore equities ETF ES3 towards the next resistance area at $4.45 to about $4.55 after price managed to break out this $4.29, $4.30 level after some consolidation. Next slide. Next one for the last one for the Hang Seng China Enterprises Index ETF 2828. So for this one, price generally has been pretty much sideways since July. So just moving sideways around $90.50 to about $94.45 about there. So we expect some further sideways consolidation right now, as price is still remaining above the breakout of $90.50 level, which was the resistance back then before July. However, there's also there could be some near-term resistance ahead above $94.45 as well, with price generally still trading in the rising wedge formation. So that could be the trend line resistance ahead. Yeah, so we could see some sideways movement for now. Yeah, so that's all for the ETFs. Generally still most of them still quite positive, and we expect some continued gains this month. Yeah, so that's all from me. I'll hand over time to Glenn, who will cover the Singapore weekly. Thanks.
Yeah, thanks. Yeah, so I think earlier Fahmi did say that Paul is on leave, so I'll be covering the weekly. Yeah, so for the macro events that happened last week, Singapore, it was really just retail figures that came out. It was up 4.8% year on year for July, so that's quite positive. It's it's quite a big improvement from the 2.4% that we saw in June. I think the main improvement, in the retail sales was the supermarket, which was up 9.6% in July compared to 1.3% the month before. So, like Sheng Siong, Giant, and NTUC really have to thank the government for it, because we believe that this large spike in the supermarket sales was likely driven by the CDC vouchers. So it's I guess positive for Sheng Siong. For the US, the main news was that the payrolls came out, the non-farm payrolls. So August was well below the estimate. It only was 22K, well below the 75,000 estimate. And it was also June and July figures were also revised downwards. So June is actually negative 13,000, whereas July July was revised upwards slightly to plus 79,000. The unemployment figures was also released, so the August one was inch up slightly to 4.3% for 4.2%, as the labor market continues to soften. Now moving on to the strategy, the next slide. Yeah, next slide. Yeah, okay. Yeah, so as I mentioned earlier, the US jobs data and policy outlook, non-farm payrolls were very weak. It came in much lower than expectations. Unemployment also has risen. The bond yields did react, right? We saw the bond markets react downwards with 8 basis point drop in the 10-year treasuries to 4.1%, and 6 basis points drop in the 2-year treasuries to around 3.5%. So following these expectations, the single 25 basis rate cut is almost certain in the 16 to 17 September policy meeting. And now some are even expecting 2 rate cuts, so a 50 basis points rate cut, which will happen in September. For the Singapore equities performance, it was quite moderate. August ended again with 2.2%. Year to date is up 11.4%. Partly due to also, I guess, the EQDP. The large cap index gainers were Yang Zhejiang, Venture, as well as Singtel. So what does all this mean? It means that, like what our title here says, the REITs and property rejoice, because they'll benefit from the slowing labor market as it raises the likelihood of more interest rate cuts, which would mean financing costs would improve for the REITs. And property sector will also benefit because of the lower interest rates, and then they'll get more demand. But however, the banks will feel the pain from the lower rates, mainly from the continued NIM compression, as the loan yields will most likely continue to fall. But we still like DBS, and we continue to like DBS mainly for its fixed dividend policy, and this will reassure investors of a steady dividend per share, or DPS, despite the PATMI or even the net interest income volatility. And as compared to the other two banks, the local banks like UOB and OCBC, theirs is more of a floating dividend policy, and we've already seen it in the first half results where the absolute DPS actually fell because PATMI fell compared to last year. As for the weeks ahead, there are quite a few events this week. So from Monday to Wednesday, there's this Goldman Sachs tech event. So basically, why is it important? Is because a lot of the big tech companies, like NVIDIA, Microsoft, they will be speaking at this event. So there could be some extra guidance or news that they will announce. So if any news is out, we will be sure to cover it, and we'll do some update or something next week. 9 September is also another big US tech news, which will be the iPhone 17 will be released. So that will be hopefully there'll be some new updates to the Apple Intelligence as well. 11 September, there's the Adobe results, and also on the same day, there's the US CPI numbers. And the following week will be the Fed meeting, so 16 to 17 September. And like I said earlier, the expectations for a single rate cut is almost more or less certain, right? I think it's high 90% now. And for a two rate cut of 50 basis, so totaling 50 basis points, it's, I think, less certain. I think it's only around 10+%, I think the market is expecting. Yeah. As for our corporate insights webinar, we have quite a few this week. Tomorrow we have Yoma, the following day we have Comfort, and 17 live on Thursday, sorry. Yeah, so it's at 12 p.m. Do tune in for our corporate insight webinars, where you get to ask questions with the upper management of these companies. Yeah, so I think that's all we have. We will now move straight to the Q&A portion. Yeah, okay. Quite a few questions. Let me just try to go through them as quickly as possible. So I won't be able to answer a lot of the REIT questions because both our REIT analysts are on leave today. And also Paul is not here. So I'll try my best to answer whatever I can. But any other questions that you have, you can ask it on our P3 community, and then I'll definitely ask the colleagues who are not here to answer your questions online. Yeah. So the first question here is, with interest rates expected to cut in September 2025, what is the outlook for our three local banks? And what is the target price for our three local banks? Excuse me. Yeah. So excellent question. So in the rate cuts, but the thing you have to take note is that the Singapore interest rates have actually shifted. The usual trajectory of how the interest rates move have shifted quite a bit, right? Not just the Singapore interest rates, but also the Hong Kong interest rates. Both of it has moved away from following or being like closely pegged to the US rates, right? It's due to multiple factors, but the fact that it has diverged slightly, right? You've seen Singapore rates like the SORA and even the HIBOR, right, decline so fast is because of the outflow of the US dollar into our Singapore as well as the Hong Kong markets. So that's why we are seeing this interest rates decline, right? And there could be a further flow through from the rate cuts, the US rate cuts, but I don't think that the flow through will be as much as it was, or I would say the relationship between the two won't be as strong as it was maybe a year or two ago. When you see the rate cuts actually affect Singapore interest rates almost directly, right? So you have to take that into mind, but you also have to notice that the rates in Singapore rates have been pretty low, right? They have been almost every month it has been being cut. It has been like every month I'm like looking at year-on-year record kind of declines for the SORA, right? So what is the outlook for the three local banks? Like I said, the NIM compression will continue, right? So the only bank that I can see so far that has been managing to maintain NIMs would really be DBS. And the main reason for that is because they're getting a lot of the inflows, right? Being the largest bank in Singapore, they are able to, if you are, let's say, a foreigner and you are coming into Singapore and you have like a lot of money to place, where will you put it in? Of course, you will put in with the biggest bank, right? Because that's where you would think that it would be the safest. Because they do not know. I mean, as a foreigner, you don't really know as good as a local. Which one gives the best interest rates and etc. etc. So that's the reason that they gave. How they are able to capture so much deposits. And with all these deposits, deposit growth, they are able to maintain their net interest margins because they place it back into higher interest assets, and that's how they are actually able to manage their net interest margins as well as their net interest income. So the other two banks, being smaller, they are not able to have this sort of a leg up in terms of the net interest margins. But the main difference, I guess, the main outlook for the banks will be looking at the loans growth. So how fast will loans grow? Loans have been growing quite well recently, really from the lower rates, right? So we are seeing loans, every month or so, the domestic loans in Singapore at least, hit or record like 3-year record kind of highs, and it has been continuing on this uptrend. So we are looking at around mid single digit, but I think it could surprise us. We could see possibly high single digit by year end. Another factor would be the fee income. So fee income has also been quite positive. I think only UOB in the in the second quarter results really disappointed because their customer profile is more prudent. So they said, I think still around 60%, more than 60% of their AUM is still placed in fixed deposits, right? Even in this low interest rate environment, a lot of their customers are still choosing to be safe and putting in fixed deposits. And fixed deposits for banks traditionally have the lowest margins, right? So they earn a lot more from investment products. So that's why their fee income growth sort of disappointed in the last quarter. Whereas the other two banks, I guess they're more aggressive and their customers are also a bit more risk. They take a bit more risk, so they would be more okay to actually put into an investment product instead of getting maybe less than 2% with a fixed deposit. Yeah, so the outlook really depending on these two, the loans growth and fee income, to sort of offset that NIM compression. But another way that we can see, how some other news that we can look at for the banks to see if their NIMs will be slightly better would be their current account rate cuts. So the OCBC and UOB are quite aggressive with cutting interest rates on their flagship accounts. So their one account, and then it's their the UOB one account, which is I guess the most popular among Singaporeans, right? They have been continuously cutting it. But yet, if you look at, you might also be worried that, if they continue cutting these interest rates, won't that affect, the deposits that they take on? But surprisingly, after they cut like 3 or 4 times, it's still one of the highest, I think it's still the highest if you hit all the criteria, right? It's still the highest amongst the 3 local banks. The reason why I think I get this question quite a lot is like, why will DBS actually cut their interest rates for their current account? They haven't done it, and the main reason is because they didn't really increase it also. So they started at quite a low base and they're just maintaining it at these levels, and I don't think they need to cut it much or even change it much because they are getting such a huge influx of deposits. Yeah. So overall, it's a bit it's a bit of a more split now between the 3 banks because of the way the banks are, right? Previously, all 3 banks are really just in tandem, right? There's not much difference between like the DBS or even UOB or OCBC. But now we are seeing them move a little bit further apart, right? Because DBS, they are very I guess, confident in giving back dividends, right? I said earlier as well. So they are giving this fixed dividend per share, and even if there's a fluctuation in their earnings or in the net interest income, right, we will still see that dividend yield hold high. But OCBC and UOB is more of a fixed, floating dividend policy. So if earnings drop, then dividends will drop as well, and then dividend yield also drop, right? So that's the main, I guess, the risk for OCBC and UOB. For DBS, it's our target price is $52. OCBC is $16.50, and for UOB is $34.60. Yeah, okay, there's this one here. Class and CRAS and ComfortDelGro have been removed from the STI reserve list following the quarterly review. How would this affect the short and medium term share price performance? Yeah, so I'm not the one that covers CRAS or ComfortDelGro, but just in general, when you're removed from the STI reserve list, it doesn't really have very little direct impact on the fundamentals, right? So short term, right, we could see some, maybe some sentiment hit, a bit more, maybe a liquidity impact, and some, reduced speculative flows as well. So short term is a bit of volatility there. But if you look at medium term, it will really be back to the fundamentals of the companies, right? It won't have this removal from the reserve list won't really have much impact on their performance, like solely just this removal, right? So the performance will likely track the fundamentals and also the earnings growth, the outlook, as well as as multiple other factors lah. Yeah, right. So that's the main, I think the main thing they take away from this is don't look at it in just whole like a single thing, that oh no, they've been removed, but also you must make sure you look at the fundamentals of the company. Yeah, so I doubt that this removal will have much impact on at least the medium term or even the long term share price performance. As for if you want to know the fundamentals of these two companies, you can just put it in the P3 community, and then I will get, I think, Darren and Paul to answer. Yeah, okay. So yeah, someone asked how many times do you expect the rate cut in 2025 and 2026? So 2025, I think it's still around 3 now currently. But we could be factoring, I think, maybe or even up to 4 right now. Yeah. So the quantum 4 as in like 4 rate cuts totaling 3 rate cuts totaling 75 basis points. So I think that's the sentiment now, 3 to 4 rate cuts. 4 is 100 basis points rate cut. Yeah. Yeah. Your view this week, CPI and PPI rise to what value could make Fed delay Fed rate cut in context with inflation increase? Well, this is quite a difficult question to answer, I guess. It could really be anything, but I think the market is pricing in, only 2% or 1% increase in the CPI, right? So I believe that it won't be much different, right? There won't be like a shock value where we see maybe like 5% or something. Yeah, so I highly doubt that the Feds will delay this September, at least a single rate cut, because it's highly likely that they will come with that one at least. But whereas maybe there will be more improvement in the later part of the year, in the third, fourth quarter at least, then they might delay the other 2 that everyone is sort of expecting. Yeah, but I think that 25 basis points rate cut is really quite certain as of now. Let me see if there's any more. Yeah, okay. What can you deduce from the latest non-farm payroll and going forward? Yeah, so it's quite weak, right? So the payrolls are quite I guess the deduction is quite negative. So going forward, what we can see is that it will be very beneficial for, like I said, to the REITs and property, because it would just mean that it will increase the interest rate cut expectations. So interest rates will likely, the Fed will probably have to step in to cut more interest rates. So that would be beneficial and positive for, in Singapore sense, it will be REITs and property sector. And if you're looking at the US, the tech side the tech sector would welcome this rate cuts as well. I think there's one more here. So yeah, if the US Supreme Court blocked all tackle Trump tariff, what will happen to the US stock market? Rally or correction? It has diverged, like I said, it has like similar to the US interest rates and Singapore interest rates, right? It has diverged quite a lot, like this Trump tariffs, the stock markets, they are sort of, immune already to all this, tariff news, right? Because after the initial one, of course, on the Liberation Day, right, it will be it was the first initial shock. But after that, the markets have sort of rallied and they have gone on new highs, right? So what will happen, I guess the main thing would be it will be a rally because the a lot of the things that the companies are doing to spend money, right, will go to something else. So like Apple is putting in so much money to try to build like a factory in the US. Not just Apple, but a lot of the other big US tech companies and even the Mac 7, right? They all are they're forced to increase OPEX to shift production into the US, right? So if they do block all of these tariffs, right, then they're just going back to status quo, back to what they previously were doing. But then now, they have I guess the money that they've set aside can be used for other things, right? Or it can even be just shifted to the OPEX line where it gets removed or yeah. So it would be a positive thing, but it has been back and forth with the courts. They block and then it can be like one day they block it and then say it's illegal, and then the next day another court comes in and another judge comes in and says, hey, no, it's not illegal, right? It's okay, they are reinstating it, or there's a delay or something, right? So it's really a lot of back and forth. But this one we just have to wait and see. But I think that there's really been uh uh like the sentiment is there that it won't have much difference, I guess. Yeah, maybe I'll leave this one for. Yeah, if Fed cuts rates in September, how will it affect the different sectors in Singapore stock market? Which sectors will respond negatively? Yeah, I think the main sector that will respond negatively, will really be the banks. Yeah. Any interest rate sensitive stocks will respond, right? So REITs, property will respond positively. Banks will respond negatively. Right? I mean, it's pretty directly related. When interest rates were spiked up, right? The banks responded positively, and then when it's cut, it responded negatively. But the thing is, like it goes to my other statement that I said earlier, right? The Singapore rates have actually been falling quite significantly, even without any rate cuts, right? So it has really diverged a lot. So I guess the banks will have really taken that hit already. So if you just cut again, right? How much more can the Singapore interest rates fall, right? Since it has really diverged so much. Yeah, which goes to another question, here that's asking, noted your explanation that Singapore and Hong Kong interest rates have diverged from US have been falling ahead of the US. If the US decides to cut 3 times, will Singapore and Hong Kong interest rates fall further? And to what extent will the fall be, if any? Yeah, very good question. Whether or not, it's really very hard because it's like a whole new world now. It's very hard to predict where the interest rates. We don't do interest rates forecast, right? So really will be very hard to say. So previously, talk about even 1 year or 2 years ago, right? If they cut 3 times, Singapore rates and Hong Kong rates will probably fall like, quite closely, like maybe 75, 50 to 100 basis points within that sort of that range, plus minus 25 basis points. But now, because it has really fallen so much, we're not sure whether it's because of the rate cuts, that's why the rates fall, or is it because of other factors, that's why rates fall. If you understand where I'm going, right? Because right now, rates have just been falling, and then the reasons for it is because of all that flow of funds into the respective countries, right? And the outflow from the US. But then if rates fall, and then is it really because of the rates of Fed rate cut, or is it because of the continued fund inflow into Singapore or Hong Kong, right? It will be really hard to say which is which. Why did the rates fall? Yeah. So to what extent will the fall be? I think it will just continue. So it will probably not. I think that the trajectory of the decline will not be impacted as much now by Fed rate cut. Yeah, I hope that is a bit complicated. I hope it answers that question. Yeah. Will this bad non-farm payroll lead to a recession later? Yeah, usually that's I think that's one of the indicators, which is why the Fed will come in and say, okay, I need to cut rates, right? So that's definitely a indicator, but we need to see many more indicators coming in together, right? The CPI is also another indicator. Many other indicators to come in to see whether or not it will lead to recession. And even then, when all these indicators come together and they point squarely and say, yeah, a recession is going to come, right? But sometimes the recession doesn't come as well. So it's really many factors. It's not just this one figure that we get every month to say that, yeah, there will be a recession. But it's definitely one of them. Yeah. Maybe I'll leave this September bearish thing to Zane. Yeah. Okay. I'll leave. Yeah. I think Iban, you have some questions for NVIDIA and Broadcom. Thanks.
Yeah, thanks, Sid. Thanks, Glenn. I'll take on the first question. Can explain risk to NVIDIA competitive advantage? Will Broadcom custom chip drive business away from NVIDIA? And the impact on GPU future? Yeah, thanks for the question. I think that's a common, that's a very natural worry that investors will have following Broadcom's strong results. Yeah, so in short, I don't think that custom chip will drive business away materially from NVIDIA. First of all, it's because NVIDIA has a very strong moat in terms of its software ecosystem, CUDA, because it is a market standard, and I think there's more than 10,000 AI researchers using that ecosystem. So even with AMD coming out with their ROCm software, as well as AMD coming with their hardware, which can actually compete in terms of influence power with NVIDIA, over so many quarters, AMD hasn't been able to chip away this kind of software advantage that NVIDIA has. Secondly, why I think that Broadcom wouldn't chip away business is because the use case of Broadcom's custom chip is very niche, in my opinion. So they are working with only 3 customers currently. So they are adding on to a 4th. So in terms of number of customers, it is already small. But of course, these are big players, like for example, Google, Meta. So what is the use case of Broadcom's chips within Google itself? It will be for very specific use cases. For example, within their internal workflows itself, like how they analyze data, or maybe for example, their Google's full self-driving cars. For example, they need some specific AI tools to analyze the environment around the full self-driving cars itself. Yeah, so currently Google develops its own chips. It's called tensor processing units, TPUs. So I suspect that with Broadcom helping Google, it will sort of replace this use case of the TPU itself. However, even with Google having its own TPU over these few years, they still have a very strong reliance on NVIDIA, because NVIDIA's chips give them the kind of general purpose use case for the AI chips itself. So these kind of general use cases, it may include, for example, their gaming itself. For example, some of their customers using Google's cloud will need 3D rendering, 3D modeling, video rendering, data processing, stats analysis, this kind of tools. I do believe that companies like Google, Meta, they will still have a strong reliance on NVIDIA's chips for general purposes. I do think that the custom chips is only for a very niche kind of purposes, which is, for example, for running your LLM models. So if you take Google's Gemini away from Google itself, you look at the whole ecosystem, Google still has so many other products. So So that is why I don't think that there will be a big impact on NVIDIA's GPU future. Yeah. There's another question. Hi, Ben. Much as NVIDIA wanted to sell H20 chips to China, but the government is having a sinister view on H20, noticeably the backdoor issue. How will this play out? Yeah, so my own views on the Chinese government having doubting the H20 chips to China. Yeah, so currently they are saying that Baba is also accelerating their own process on their chips itself. However, uh, I don't think that Baba will be able to catch up so fast to Nvidia because I think a few months back, Nvidia's Jensen Huang was saying that uh, currently the most advanced chip that China has is roughly in line with Nvidia's Hopper chips, which is one generation behind. And I think from Hopper to Blackwell itself, there is a very big step up in terms of technological advancement. Because Blackwell is able to scale 72 chips in terms of performance compared to Hopper, which can only scale about 8 chips. Yeah, so there's a 9 times increase in scalability. I think I think China will take very long in terms to get this kind of technology on their hands. Okay, so that's the first point. So I do think that they will still have reliance on Nvidia's chips itself. Secondly, if we think about the worst case scenario, if Nvidia is unable to sell to China itself, currently China takes up about 13% of Nvidia's last year's revenue itself. So if worst case scenario China doesn't play out, there will be a 13% impact. It is still not very significant. I do see many growth drivers coming outside of China. For example, hyperscalers having their operations in many parts of the world, the US, the Europe, and also sovereign investments. For example, the European Commission committing to many billions of investment in sovereign AI, as well as UAE um, uh, committing to a specific set bulk of investments in NVIDIA's chips itself. So and I think for this most recent quarter itself, for Q3 itself, even China's revenue is almost zero, but Q3 is able to grow 56% year on year. So we can see that even without China itself, the worst case scenario, NVIDIA is still able to grow 50+% year on year. So yeah, so I mean in short, in the worst case scenario, I don't think that this will be very, even if NVIDIA is unable to sell to China, I don't think it will be a very material impact because there are still many growth drivers from other areas. Yeah. For micromechanics, is their goal in moving towards the front line in the future? Yeah, I think you mean front end. Yeah. So yeah, I would say for micromechanics, they I do believe that their goal is to move towards the front end because the front end is about 3 times bigger than the back end in terms of overall industry size. Yeah, so for micromechanics, I think it is a good step in terms of pivoting towards wafer fab equipment, which is more front end, and I think a lot of demand will also come from there. Yeah. Yeah. Hi, Ben. Is Tan Peng Hock still the chief executive for Broadcom? Yes. Yeah. So in the most recent earnings itself, um, he mentioned that he is committed, and the board has also given him the the assurance to continue to be chief executive for the next 5 years until 2030 itself. Yeah, so I think the investors took it very positively, and hence that explained the rally on Friday. Yeah. Yeah, I think there's a question. What ASL lately price appreciation? Not sure if you mean ASML. Yeah, uh, but yeah, I think generally our view on ASML is also positive because Um, they are also the only company which has the EUV technology in semicon equipment. Yeah, so that is the strong moat, and with hyperscalers increasing capex on semiconductor chips itself, this will increase demand for the equipment also. Yeah. Yeah, I think that's all from my end. I'll hand over to my colleagues. Thanks.
Yeah, something about the Yang Zijiang Financial Holdings. Yeah. So asking why will Yang Zijiang Financial Holdings outlook get better after spin-off? Yeah, so it's I think why it's outlook, it's better is because currently they have the investment management, private credit, as well as the maritime leasing, all bunched up together into Yang Zijiang Financial Holdings. Yeah, so they are quite different businesses, and even when they are doing the briefings and the analyst briefings and they are showing the data, it's always separate, right? So it's when you are looking at a company, you'll be saying, oh, you need to take like sum of all the parts, right? So you take 50% of this, 50% of this, or whatever the weightage is, and then you add it together. So the direction is not very as clear, right? Because it's like, what is this company supposed to be? Is it a maritime leasing company, or is it a investment holding company, or what is it, right? So currently they price it as a mix of financials plus leasing, and the valuations are all a bit like a bit more muddied, right? It's not as clear, right? So the moment when this marine development is spun off, each of them can be sort of like valued on its own merits. So it's like, for example, it's like, if you're good at English, then at least you'll be there. But if you are taking two papers together, right, then your A plus C, become like a B or something like that. Yeah. So that's the reason why, to put it very simply, that's the main reason why the outlook will sort of get not outlook lah, but I'll say the valuations, and will get slightly better after the spin-off, where there's more direction, there's more focused. Yeah, sorry, that's the word, more focused. Yeah, there's one on Sembcorp, Micron. Yeah, I think that will be left for Paul. Yeah, I think Iman, you have one more on the Intel. Yeah.
Oh yeah, sure. I can take on the Micron one. Yeah.
Okay.
So for the Intel one, what do you think of the Intel foundry business? Will it be able to take off? How about the new chip got customers? Yeah, so for the foundry business, currently Intel is still at sort of a survival stage. They are still, I mean, they just finished the layoffs, and I think they are also trying to sell some of their non-performing businesses. And even with the US government taking a stake in Intel, I don't think that will really help in terms of their foundry business, because TSMC already has the customers, the infrastructure, and the equipment already going forward. So I think TSMC is still quite ahead of Intel. Whether or not it will take off, we do need to see a few quarters ahead. So right now, my take is that it's still very lagging behind TSMC. What about the new chip got customers? Yeah, so I do think there's customers, mainly the OEM, PC OEMs. So however, it's not about whether they have customers, it's about whether the number of customers has been declining as compared to previously. Yeah, so I do think that the number of customers for Intel's chips will decline, because they are competing with AMD's CPU chips itself. And recently AMD has been gaining market share from Intel, and they are still gaining market share. So that's why currently for Intel, I'm still not very positive for them. Yeah. Outlook for Micron. Yeah, so Micron, for those who are unfamiliar, they provide memory chips to be used within the entire GPU rack infrastructure itself. For example, Blackwell infrastructure. So they mentioned in their earnings that they are fully booked from now till the end of 2026 itself, because of Blackwell's RAM. Their memory chips are being used in Blackwell itself. And I think their memory chips are market standard. So is also the top tier memory chips in the market, being used for high bandwidth purposes for AI workloads. So our outlook for Micron is still very positive. There's still strong demand for Micron's memory chips, and because of hyperscalers increasing capex, we do see increasing demand for Micron as well. Yeah. Outlook for Sembcorp wise, I think you will have to divert the question to the PG community. Yeah. Thanks. Yeah, I think that's all from my end. Thanks.
Okay, thanks, Iqbal. I'll cover some of the TA questions first. Yeah, so let me just share my screen. Okay. Okay, the first question is on Hong Kong land. Yeah, so for Hong Kong, I think overall it looks like it's still in a bit of a consolidation right now. I think it's in this ascending triangle where there's quite a lot of resistance around 640, but this is the key trend line support that is trading in. So I think it's still in a bit of a consolidation, but I'm positive that it should be able to make a breakout afterwards with continue higher lows from along the way. Yeah. So afterwards, if it breaks above like this 644 again, I think we could see another leg up. As long as the price is finding support around 615, which is this area that it broke out recently, as well as this trend line support area. Next one is ZKX, Everglory. And so Everglory, I think is doing a bit of a pullback, but I think it should be able to find some support soon. Previously when there was a dip, I think this 20 MA area is a support. So I think support could come around close to 65 cents area. In terms of the weekly chart, that is around a retest of the 5 MA of the weekly as well. So I think close to 65 cents, we should be able to find some support over there. Yeah, overall it's still in an uptrend. So I think it's a bit of a dip, some pullback right now. The next one is on Singtel. And so for Singtel, I think overall still a very nice uptrend over here. Recently a bit sideways, but yeah, just looks like a bit of a consolidation sideways with some support around $4.33 right now, where it looks like it's doing a back test of this breakout last week. And current resistance is a recent high around 442. So it looks like a bit of a sideways over here right now. Overall, momentum still very strong, whereas on the weekly chart it's still holding up above the 5 MA. Yeah, so just a bit of a sideways, but strong uptrend. Okay, next question is on Yangtze Shipbuilding. Yeah, so for Yangtze Shipbuilding, I think it's quite a strong uptrend as well. So today price made a higher high, so it has to do a bit of consolidation sideways, and then price break out above the high or since about 310. So I think it could be able to continue. It should be able to continue this uptrend to actually, I think, hit the next resistance to look at probably around close to 332. I feel. Yeah. Therefore, Comfort, I think Comfort probably is a bit sideways right now. So held at the support of 145, which was a previous resistance, and just moving a bit sideways, a bit of a lower high for now since the pullback started end of July. On the weekly, also just finding support on the 20 MA level and just doing some slight bounce over here. So I would think some resistance for now, probably 152 to 156 area for now. So probably I think some sideways consolidation right now first. Yeah. Then for Franklin is also moving a bit sideways for now. So just between 140 to about 140, around 146 about there. So I think nothing much, just moving sideways. Yeah, the price needs to break above 146 for it to resume the upwards move. And the weekly itself, on the weekly, there's some not much momentum yet. Price is still below the 5 ME, trading below the 5 ME level. So try to break above that, and we could see some potential bounce, yeah, towards maybe 150. Then I think if there's a breakdown below, 140, the next level of support, next level of support could be somewhere around 130, 135 around there. We're just moving sideways first, but not much bullish momentum yet. Okay, next one for Lam Chang. I think Lam Chang doing for Lam Chang, I think there's a bit of a pullback recently, but I think yes, and probably found this area will probably be a support. So previously there was a bit of a range consolidation prior, around 41.5 cents to 42.5 cents, this area over here before price broke out. So it's doing a back test over here. I think here should be able to find some support. On the weekly chart, there's also the 10 MA. So this 417 right now. So probably I think this area will be quite a strong support for price to do a rebound after quite a bit of pullback since 50.5 cents. Okay, then for Yang Zhejiang Financial, I think it's still slow and steady for now. Just a bit of a sideways consolidation where price broke up of $1.06 last Monday, and then just holding around there. So I think overall still very steady uptrend, where generally price is trending along this upward trend line support, and then tends to do some range consolidation along the way before. So I think should be able to continue uptrend over here as long as it doesn't break below this upward trend support, like around 103 about there. The next one is on Keppel. So I think for now Keppel, I think is probably still in a bit of a range bound, but it's looking better. So price the last Friday of August, it managed to break above this around 852 resistance level, this horizontal resistance level, and then just moving sideways over here. So I think it's still quite bullish. Just a bit moving sideways with some little resistance around 884 this level. Yeah, so I think for now maybe moving sideways, but as long as it holds 852, is still looking okay. And on the weekly, it's also still holding along the 5 MA as well. So that's still quite strong. Okay, next one is on sets. I think sets nothing much still for now. It's been just range consolidation since end of July. But overall structure is still okay, as it's still holding above this $3.13 previous breakout level, and probably it could be a ascending triangle consolidation with resistance around this 336, 337, and possibly higher lows forming along the way. So I think I will expect some further consolidation to take place for now. SI Engineering. For SI Engineering, I think probably sideways as well. I think there's still some weakness as price is still unable to recover above 318. So previously 318 was this breakout level. However, there was afterwards price broke back down and found resistance. And I think most probably for now, I think price will hold maybe sideways from this 302 support level to about 318 for now. And on the weekly itself, just currently still below the 5 and 10 MA level, 312 and 315. So probably unless price can break back above this 318, for now maybe just a bit of a sideways consolidation first. The next one is Semco Industries. Semco Industry, I think, sort of just moving sideways around the 200 MA level, this purple line. So I think it's just moving sideways between like 603 to 618. I think to break out above this 618 level to try to rebound further. Then the next resistance probably around $6.30, 630, 635 around there. In terms of the weekly, I think they are retest of the 5 MA level, this blue line over here. So probably need to try to hold above that, then we could see some possible further rebound. Yeah. So I think for now, just a bit of sideways first, unless price can break out this range has been made. Okay, next one is WeHer. So for WeHer, I think overall still a steady uptrend, probably trading within this uptrend channel over here. Recent price action is still good. Previous resistance around 71.5 cents. Holding as a support for now, still higher. Previous resistance holding as support. Higher lows form along the way. So I would expect for now it's just some sideways consolidation, 71.5 cents to 76 cents. I would expect price to continue to trend higher. Next possible resistance might be somewhere around 78 to 79 cents area. We does retest this uptrend channel resistance area. Moving on some US counters. The first one is NVIDIA. So NVIDIA, I think we're seeing some weakness for now when price is below this range. So previously it was like 170 to 183 was this range price was consolidating in. And then last week, price held 3 days at the support. Then there was a gap down on Friday below this range. So and tested this swing low of around 164.50. But I think here we probably see a bit of a bounce, but I think when price does a retest of like 170, 172 area, probably find some resistance from the recent breakdown. Yeah, I think when it does reconnect with the moving averages like 10 MA, you should be able to find some resistance over there for now since with the breakdown. Then I think below 165, next support level to watch will be around 158 and around 153. So I think price, if there's some further dips, I think price will find some temporary bounce from these levels. Okay, next one is on Alphabet. So Alphabet very gap out after the news and then just still very strong, just trading all of this uptrend channel after the gap up. So I think for now that should be able to continue some strong momentum. The near-term supports I think should be able to come from the 5 MA level. So currently around 224, but it should catch up with the price over the next few days. I think recently we've seen some I think for now support maybe around 230 this level. Yeah, so I think price will trend along 5 MA for now first for this gap up. As for United Health, I think we should expect some upside. So I think after the gap up price consolidated sideways, found support from the 5 and 10 MA levels. This around close to 303 back then. And Friday we can see price broke above this resistance tree around at 310. So I think we tested this 316. I think not much for resistance here. I think price should be able to hit higher once it clear Friday's highs to test the resistance should be around 322 to 326 level, then followed by 342. So I think United Health should be able to continue trending higher, yeah, based on the recent price action. The next one for TLT, I think TLT is a bit of a range, but I would expect some breakout. Yeah, for TLT, generally has been ranging with resistance at $88, $89. Then yeah, very long range since April this year. But I think generally we've been seeing higher swing lows along the way at high highs. So I think over time should be able to break out of this range to hit the next resistance at around $90 and then followed by around close to $92 as next resistance. And when we look at the bond the inverse, which is the 20-year bond yield. I think the 20-year bond yield also should be able to trend lower because we've been seeing lower highs. So it's a descending triangle, lower highs and support around 4.74%. I think we should be able to see some dips in terms of the 20-year bond yield next to maybe to test like 4.62. So I think that will make TLT actually try to break out these current ranges in. The next one is on CapitaLand Escort Trust. So for Escort, I think it's just trending steadily higher. So recently broke out this range consolidation at 88.5 cents. And I think you should be able to test the next resistance on 91.5 cents to 92 cents area, then maybe just move sideways again. Overall, it's just slowly trending upwards. So then next one, there's a question on the Hang Seng Lion OCBC Hang Seng Tech ETF HST. So for HST, I think it's been a bit choppy, but I think gradually overall it's still slowly trending higher. So since the breakout of this resistance back then at 88 cents level price, higher lows, and then some resistance for now it's around 93 cents to 94.5 cents. I think this area should have some resistance. So maybe a bit of a sideways consolidation, but gradually trending higher along the way. Yeah, then support for now would be around the 91, around close to 91 cents area. So maybe just some sideways. The next one on Samudra Shipping. Samudra, I think for now, looks like a range, very clear defined range consolidation between like 96.5 cents to $1.04 area. So I think for now, nothing much. Unless price can break out of this current range. Yeah, in terms of weekly, I think maybe some support at 99 cents if it does reconnect the 10 MA and the weekly. And for now, probably just sideways first. The next one is on oil tech. I think for now, oil tech probably sideways for now first. So there was a bit of a dip last week below the weekly 5 MA recover. There was a bit of recover above that. And yeah, when price recover back above this $1 level. So probably for now, I think there's some resistance in these recent levels like 111 to 115. So I think price will probably do a bit of a sideways consolidation first after this rally. For CNMC, very strong. CNMC, I think very strong rally. Since the breakout of this 63.5 cents level, yeah, just very strong rally last week. So I think for now, I think price will trend along the 5 MA level for now. This currently is around 78.5 cents level. Yeah. So I think we'll probably still continue the strong momentum. Yeah, then in terms of horizontal level of support, I think this around this 78 cents level is a support level. The next one for CSE Global. CSE Global, I think it should be able to continue higher. I think currently it's doing a sideways range consolidation. Overall, it's an uptrend. And the good thing is that it keep on testing the resistance levels. And then there's been higher lows form, looks like possibly higher lows form recently at the build up of resistance. So I think I'm quite positive. I think price once it break out this 71 cents level, it should be able to trend higher. To perhaps retest this trend line resistance that's somewhere around 77 cents. I think. Okay, next one's on Century. So Century, I think previously price broke out of this consolidation wedge, but it looks like there's still some resistance when it tested this 183 previous high. So a bit of a pullback recently. I think I'm still positive on it, as I think generally support has been is still holding this horizontal support at 167. This could be a bit of a higher low over here, and generally has been in an uptrend as well. And on the weekly, I think it's still okay. But it's taking a bit of a time to load up. Yeah, on the weekly, we can see that price is still holding the 5 and 10 MA level. So currently it's 172, 173. So price has been respecting this level despite a bit of a dip recently. So I think this will be the support for now, and price should be able to rebound back towards this 180 to 185 area for now will be some possible resistance. Yeah. So maybe a bit of maybe it could just do a bit of a further sideways movement for now first. Okay, next one, SIFMAC. I think for SIFMAC, for now it looks like a sideways consolidation. So recently it looks like a retest of this $1.01 level. There could be some sideways movement after that. But overall it's an uptrend. Then I think it should be able to find some support around 97, 98 cents level if there's a pullback. Yeah. Okay, then there's questions on Fortinet as well as Celsius. Yeah, so for Fortinet, after the earnings came down, I think it's just generally been trading sideways. Then on the weekly, it's currently doing a retest of this 5 MA level around 78. So there could be some real resistance. Yeah, I think we could see some slight pullback from this area, but I would think in terms of downside, I think maybe probably the recent swing lows over here like 70, 74 should be able to hold the price. So maybe some further sideways movement for now. Then for Celsius, I think overall is in that uptrend. Then recently possible is starting to move towards a range consolidation. So there was this gap up over here retested on high volume, afterwards came back down. So I think probably a bit of a sideways movement for now first. Yeah, it could turn sideways into a sideways consolidation. Yeah, on the weekly, it looks like a retest of the 5 MA over here for now, 58. Okay, then there's a question. September is historically a bearish month. What's the probability of this September, as there's pretty certain there will be a rate cut? Yeah, so historically speaking, September is usually quite weak for the markets. If you look in terms of the stats, the post-election year, so which is the first year of a presidential cycle, September on average returns about minus 1.5%. Then it's about 43% chance of September being positive. So I think the stats kind of support this, but in terms of if you look at the indices, I think it's still very strong. So I think we still have to. I think I'm still bullish unless there's a breakdown of some key levels. So for example, I'll be looking at the 30 SMA level. For example, if you're looking at S&P, this yellow line, 30 SMA has been a very key support where whenever there's some dips, very fast dips in the indices recently, we've been finding support around there. So I think as long as this 6,400 level is finding support, I think that should be still okay. Then in terms of the weekly, it's still holding at least a 10 MA on the weekly, so this 6731 level. So I think as long as here is still holding as support, then I'm still bullish. Unless there's a breakdown below this weekly 10 MA as well as the daily 30 MA, then I'll be more cautious this month. Yeah. So that's my take for September, even though the stats kind of show that tends to be a bit weaker, but in terms of price action for the markets, I think we're still seeing quite bullish movements. Yeah. Next one on here on Pacific Radiance. I think Pacific Radiance still quite strong. Recent rally looks like taking a bit of a slight breather. I think for now, some resistance at this 0.084. I think you should be able to find some support and test daily 10 MA around 0.079 level, which is so this a bit of a this swing high before it went higher. So I think most probably after testing this, I think it will move a bit sideways for now. The next one on Marco Polo Marine. So Marco Polo Marine, I think still very steady uptrend. I think we tested the previous high 0.071 and then doing some sideways consolidation over here. I think price generally could be trending with higher within this uptrend trend itself. So I think here might be some support 0.068, and it could do some rebound over here. Yeah, so I think it will continue this trend of just steadily trending higher. Okay, for Geo Energy, I think it's also looking good. Today there's a high volume bullish candle. So previously, I think price has been there was a bit of consolidation, and price broke above this 30.5 cents level, and then also cleared the 39.5 cent level. So and today hit another resistance level of 42 cents. So I think for Geo Energy still looks good. I think it could continue to hit higher towards the next level of resistance. I think after 42 cents will be around 44.5 cents, then followed by 49 cents in level. Then I see there's a question, oh, what's your view for Nam Chong? I'll do a day on that. For Nam Chong, and for Nam Chong overall, I think it's still quite bullish. I think this counter tends to do a bit of rally, and then you tend to see a bit of a sideways consolidation afterwards. So there was quite a strong rally end of August. I think we are seeing the sideways movement for now. So probably I think it should consolidate sideways a bit for now first. Now on the weekly 72.5 cents might be the support, which is the 5 MA on the weekly. Yeah, then for now, I think some resistance would be the recent high close to 79 cents about. So I'm expecting some sideways movement for now first. Then there's a question on the CFA REIT ETF. So for the CFA REIT ETF, I think it's still slow and steady. So after it cleared the 81.5 cents level, you can see that it's just still continue to just trend higher steadily along the 10 MA for now first. So I think probably will go higher. The next level of resistance probably around 84.5 cents level. Yeah. So I think it's just a steady uptrend. Probably can draw a uptrend channel for that. The next one's Yen Lot Land. I think Yen Lot Land probably some sideways movement for now first. After a rally, then generally just moving sideways at 70 cents to 74 cents. So I think that will still Next one, Q&M Dental. Okay, sorry, I think my Wi-Fi is okay. Okay. Yeah, so for Q&M Dental, I think overall still very positive. And just looks like for now probably a bit of a sideways after it hit like around 50.5 cents, then it's moving a bit sideways. For now, support I think will be around the 20 MA level, possibly around 47. Okay, then yeah, on the weekly 5 MA also around 47 cents area should be some support. So I think probably for now maybe a bit of a it could move into a sideways consolidation. The next one, super micro. Okay, super micro I think overall still quite weak. Price is holding below the 5 and 10 MA levels. This is the breakout 45, and then over here I think there could be some support around 39 where there's an upwards support line and previous range support level over here. But I don't expect much. Probably some slight bounce. And the recent breakdown like here at around 41 to 42, maybe it will be some resistance really. Given that it's price action overall is quite weak. Okay, next one, Guoco Land. So I think Guoco Land, I think is just an uptrend and slow and steady. Yeah, so recently I think price broke above this 189 level again after just a slight sideways, and generally price is finding support around the 10 MA level. Yeah, and today I think looks like another breakout of this 194. So I think probably we'll still continue to make higher highs to come. Yeah, then next level maybe somewhere around $2. Yeah, there's a question. Do you think to count the volume size when you're analyzing technicals? Yeah, I don't look at it, but I think in like today's webinar, I try to cover as many counters as possible. Yeah, so generally I just try to look at what's the trend and what's the possible upcoming price action. Yeah, I think volume is quite important to look at also, but if you have time, I will skip some of this. Yeah, and yeah, so I just look at what's probably the current support resistance next. Next one, the TA for the 3 local banks. Yeah, first one for DBS, I think nothing much going on for now. I think just a very well clear defined range consolidation. With resistance at $51. I think once it break above this 51, we'll probably see another rally take place. Yeah, so probably sort of 49 to 51, maybe it could reach 53 next, based on the current range, about $2 range. Then for UOB, I think Yeah, for UOB, I think it's also looking quite okay. Price recently broke out above this 35.50 level. So I think probably we see a retest of the 36.20 level again. And next one is around 36.60 level. And for OCBC, I think for now still in a bit of a consolidation with resistance still around $17, but still higher swing lows along the way. And yeah, so I think still positive. And probably for now, maybe still a bit of a sideways consolidation. The next one is on SGX. Yeah, for SGX, I think overall it's trading within this uptrend channel. I think now is probably somewhere near the high 16 over here. So for now, I think maybe moving a bit sideways in terms of the support. I think for now, maybe around $16 would be a support for now. I expect price to just trade moving a bit sideways with resistance above 16.60. Yeah. Next one is MIT Mapletree Industrial Trust. So I think this one is still looking quite good. Price just slowly trending upwards with since the breakout of $2.03, and then also break above $2.08. So I think we'll probably continue to trend upwards to the next resistance around $2.17, $2.19, this area. Yeah, next one, MLT Mapletree Logistics Trust also since the breakout of a few range recently at since 118 breakout, and then 124 also. I think today broke out of this 124 resistance, so I will expect price to actually hit higher to test next resistance around 121, 130 level. Yeah. Next one for Keppel DC REIT still looks like a bit of a rate consolidation taking place for now, but I think still positive as during this consolidation we was holding above this previous high at 228. So I think for now we might still see some consolidation, but once you break above this 238, I think we can expect some upside towards maybe 240. Yeah. Okay, then for SIA, I think for now it looks like it's a bit of a range consolidation. Yeah, still retested the 5 MA level and the 20 MA finding resistance from there and just moving just a bit sideways forward there for now. And with some support for now is 655, and then the next one is around 6.9, 650 area. So I will expect some sideways movement for now first. Then the key reasons to break past for price to rebound further will be this 665 over here. Then if you can get past that, then price could rebound further towards maybe 680s. Next one is on CICT, Capital Integrated Commercial Trust. Okay. Yeah, so for this, I think just a steady uptrend. Looks like a bit of a range for now, like 224 to 229. So maybe it's just moving a bit, consolidating sideways again. Then I think once you can break above this 230, then we could expect some higher highs to come to test. I think next level of resistance like 235. Yeah. The next one is on Suntec REIT. Suntec REIT, I think for now, probably looks like a sideways consolidation. So recently there was a dip, but being held at the 20 MA level, and then price also like 120. Previous reasons were 127, so it held above that, still looking good. And recent reason 135. So I think we might see some sideways consolidation when it comes back to this recent high level. Yeah. My next question is on soil build. Okay, soil build, I think definitely very strong momentum. Recently, I think Friday just booked at 243 this consolidation kit. So yeah, just trending higher, and I think for now probably be finding some support around the 5 AP. So probably be something similar to this phase where mid-August when there was a rally, there was a dip, then it found support along this blue line 5 MA and continue to trend higher. Next one is SPL Lifestyle. So for SPL Lifestyle, I think it's quite positive as well recently. There's been a breakout of 18.7 cents, and then price is continuing to move higher. So I think now it's finding support. I think the 5 MA over here, the blue line, would be acting as a short-term support for now. It's a 19.5 cents over here. So I expect price to move higher. Yeah, and I think next reasons maybe somewhere around 22 cents about there. The next one, there's a question on NTT DC REIT. For NTT, I think nothing much is taking place right now. Yeah, since the IPO price pullback, and currently I think it's just finding a base around 93 cents to 25 cents area. Yeah, so just very tight consolidation, and if price can break over 95 cents, then we might see some further bounce towards 97 cents. So I think for now, very range bound for this REIT. The next one is on Anand International. Yeah, so for this, I think it's a penny stock and moving very strong bullish momentum recently. So I think it has actually retested some previous levels. So I think next level of resistance maybe somewhere around 0.023, I feel. So previously this was a range consolidation back in 2023, this area. Yeah, since it we tested this 0.020 level, which was this previous range support, and continue to hold over there. So I think could hit higher towards 0.023 next. Next one is on iFast. So for iFast, I think probably a bit of a sideways consolidation for now first. Yeah, on the weekly there was a sharp sell off, then there was some rebound, but price is, I think, should be finding some reasons from the 5 MA around 883. So we might see some I think maybe some pullback. But I think the 10 MA should be able to find some support like 837 for now. So I think that will be like, it could just move sideways in this range over here first. Some AEM. Yeah, for AEM, I think it's yeah, since the retest of this swing low support around 140, there's been a bit of a rebound and out of this downwards resistance line, and also price above this 150, 151 level. Some consolidation take place, but move a break higher last Wednesday. So I think for now we might see some maybe some continued rebound. In terms of the weekly, also recovered above the 5 and 10 MA levels. So I think we could see some continued rebound towards some of the to test some of the swing high resistance, like this 161 when there was high volume. Yeah, that could be a near-term resistance. And the next one about 165. Next one, nano film. Yeah, so the nano film I think is also probably it could hit higher. So after some consolidation in this descending triangle where held the support over here around 70 cents. I think mid last since Wednesday onwards there was a breakout above this downward resistance line 75 cents, and then I think tested this swing high area of resistance 76 cents, and today continued to fire. So I think it's there's some bullish momentum right now since the breakout of this downward resistance line. I think price should be able to move higher to test like the next level of resistance like 78 cents, 78.5 cents to 79 cents equivalent. The next one is Olam. Yeah, for Olam, I think probably some rebound from this area because this was generally a range like around $1.02 then 2 cents, and there's we tested this hour support line where it found support. So probably do some rebound from this area. I think we'll continue to keep in this range. Yeah, then some later result with this swing high 106 and then this double top at 109. So I think I will still think probably could continue to be a range first. Yeah, then next one is on First Resources. First Resources, I think looks like a consolidation taking place right now. Just sideways consolidation, and price is holding like the short-term moving averages like 168. So I think if this holds, then we might see some rebound, but I think for now probably just moving sideways with resistance around 174, 175, right? For now. The next one is on Palantir and Broadcom. Yeah, for Palantir, I think there's still some weakness in terms of the price where so after this pullback recently where price broke down below this upward channel support, it's been facing resistance at the 5 and 10 MA levels, these short-term moving averages, and price generally moving sideways will be a lower highs. So I think price might do a bit of a continue to just move a bit sideways consolidation. If it breaks below this with lower wicks again, that 150 might go and retest this 142 level again, then maybe just moving sideways with lower highs. Yeah, then below 140, below this 145 area, the next support I think will be around 133 there. Yeah, then for Broadcom, I think after the earnings, we've seen a bit of a selling from the opening. So I think we might see some possibly some pullback first. Then if it does retest this prior area of resistance, I think this will be a support like around this 315 area. Yeah, see whether it retest the 5 MA level, that could be act as a bit of a support. Yeah, I think the section may be a bit similar to Microsoft. So previously Microsoft, I think what I can think of is that after the earnings there was a gap up and then some selling off. And once it retest near to the resistance, we've seen some bounce, and then after that maybe some sideways. Yeah, so I think it's about one. I think there's still some questions in the Q&A for the TA. Yeah, sorry, I didn't will take all of them due to the time constraints. But feel free to post in our voluntary community over there, and then I'll answer it. Yeah, so I think I will end today's session. On behalf of my team, I would like to thank everyone for attending today's session and then for all your questions as well. Do feel free to join our webinars if you are free. I think this week we have ongoing webinar as well, which is Yoma, ComfortDelGro, and as well as 17 Live. Yeah, so if you're interested in these companies, do feel free to join them and can ask questions to the upper management as well. Yeah, so I think that's all for today. Thanks for everyone for attending, and hope you have a good week ahead, and we hope to see you again in next week's session. Yeah, thanks everyone. Bye bye.